any and all fiat of any kind and any variety to convert to Bitcoin, because the bigger the network, the bigger the safety, security, the more adoption, the more participants. And so to say that, well, they're the enemy. Well, they might be, right? BlackRock and JP Morgan, I shouldn't accuse people directly, but it's hypothetically possible that since November of last year, that's the only way the value of a network goes up. Is there more?
On Thursday, one of Wall Street's largest companies, asset management giant BlackRock, joined the long list of companies trying to bring investors closer to the cryptocurrency industry. The Wall Street giant, which manages almost $10 trillion in assets, caused a slew of mixed reactions in the crypto community when it applied to the U.S. Securities and Exchange Commission (SEC) for a Bitcoin exchange-traded fund ETF. Some members of the crypto community believe application and eventual approval, given the firm's high ETF approval rate, will help crypto asset prices, but others are critical of the move. According to people in this category, Black business ethics contravenes everything the crypto industry represents. Others have also pointed out that the proposed product is technically a trust, but experts say it is functionally the same as any true ETF. According to the filing, BlackRock is applying to launch the A Shares Bitcoin Trust, which it says would allow easy access for investors to get exposure to crypto in a product offered by the world's largest asset manager. A section of the filing grids the shares are intended to constitute a simple means of making an investment similar to an investment in Bitcoin, rather than by acquiring, holding and trading Bitcoin directly on a peer-to-peer or other basis via a digital asset trade. Over the past 10 years, a number of investment firms have applied for a Bitcoin ETF, but the SEC has not approved any of them, frequently citing concerns about market manipulation. Last year, Grayscale Investments sued the SEC for not approving its application to convert its Grayscale Bitcoin Trust, GBTC, to an ETF. Other asset management firms, such as Cathie Woods and ARK Invest, also had their spot Bitcoin ETF application rejected by the regulator almost immediately. However, experts say this may not be the case for BlackRock, which, in addition to being the largest investment manager, has partnered with the Bank of New York Mellon, another respectable financial institution, that the application notes would be the custodian for the trust cash holdings. In the most recent episode of his weekly roundup with Blockworks Macro, renowned hedge fund manager and cryptocurrency enthusiast Mark Yusko discusses what the spot Bitcoin applications could mean for the entire cryptocurrency space, especially considering the firm applying for it. As we bring you clips from the discussion, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more videos like this one. In spite of the SEC suit against the US-based exchange, BlackRock will also be working with Coinbase as a custodian.
When the futures-based ETF was issued, it's entirely possible that those large institutions have been shorting the shit out of Bitcoin. Creative is the word that comes to mind. I mean, you're creative for making this thing happen this morning with the PC. But look, first we had the dovish hike. I'm like, what the hell is a dovish hike? I mean, the creativity to wordsmith all these words. And look, I don't envy their job. In the digital age, in the social media age, every single word, every action, every body movement, everything, every piece of luggage you carry is interpreted. And so now they've come up with this idea of a hawkish pause. What does that mean? Well, in December last year, everybody said, "Oh, they're gonna pivot. And the stock market surged, and everybody's like, "Oh, this is great." And now we've had this, not incredible, it's crazy. I mean, maniacal. I mean, is true mania run in some of the tech stocks, particularly around AI, just on nothing. On literally nothing. And in terms of the results of the companies, the tech is great,
yeah.
But Microsoft invests something that's worth 10 billion, and their market cap goes up 200 billion. Or Google promises $1 billion order to NVIDIA, and their market cap goes up 200 billion. Or this company C3 AI. And look, I've been wrong in the sense that this stock literally should be zero. The stock should be zero. Whatever they earn in revenue, they lose. Like they make 60 million in revenue every quarter. They lose 60 million every quarter. They eviscerate cash. There is no business there. And the stock is up like 400% this year because its ticker is AI. Everyone thinks it's open AI. And that's just stupid. So the markets lost their mind because of this belief that somehow the Fed's going to, as you said, inject liquidity, but they're not. I mean, save the 300 billion that they did in an emergency around SVB, okay, which reversed a whole bunch of the QT from last year. They're definitely not loosening. They have not, they stopped hiking, maybe. They said maybe there could be a couple more. But they have not reversed, and they have not started injecting liquidity, and they have not stopped shrinking their balance sheet. So it just doesn't make any sense. And if you use the discount rate, the average discount rate of 5.25 today, the valuations are just stupid, right? We've had the S&P multiple expand in a world where interest rates went from 1 to 5. It's completely illogical. If you can do math, right, which math is hard, that is one of my hashtags, it just wouldn't happen because earnings have gone down, not up. So everything's wrong with that picture. Now, China, on the other hand, quietly, money printer go burr. They're quietly printing money, lowering interest rates. Their currency's off 5%. That's a big deal. Stock market had surged from October, then fell, gave it all back. But now in the last 2 weeks, suddenly is up again because people are like, oh, wait a second. They really are printing money. Their GDP really is going to be back to 6%. They really are focused on growth. Now, my favorite, Michael, is they've got a new bill, broad-based, they call it a white paper, actually, which I think is kind of funny, on crypto, that may reverse the ban. Shocking. No, not shocking. Like I said, China, I've been talking about this for China's playing Go. They're playing a different game. The rest of the world is arguing how to set up the checkerboard. They're playing a different game. From the lockdowns, which they fomented around the world. Well, why did they do that? Why did they destroy their own economy for 2 years? To gain market share, to gain a pause, back to the hawkish pause. They gained a pause in activity, pollution, all kinds of things. They had a big reset, and now they're stepping on the gas and sprinting away. They're first to CBDC. They're going to be first to a broad-based digital asset system. I mean, they're kicking our ass. Any and all fiat of any kind and any variety to convert to Bitcoin, because the bigger the network, the bigger the safety, security, the more adoption, the more that's the only way the value of a network goes up. Is there more participants? And so to say that, well, they're the enemy. Well, they might be, right? BlackRock and
other well-known members of the Bitcoin and cryptocurrency community have also responded to BlackRock's application. Prominent anonymous Bitcoin analyst Plan B tweeted, "Congratulations to all Bitcoin sellers for the last 2 months you have been selling to BlackRock, front-loading their ETF SEV." Adam Cochran, the company's founder and partner, also posted a bullish thread in which he said, "People don't realize that BlackRock really made the gold market as we know it today. Before BlackRock, the market was worth $1 trillion, but now it is worth roughly $13 trillion. After doing so for 2 decades, BlackRock's network convinced millions of users that gold was necessary for a well-balanced financial safety net, and its army of advisors promoted the idea that gave gold more credibility in a portfolio. Young wealth managers and economists who have ascended to positions in central banks and sovereign wealth funds now believe that the idea that gold is a secure investment for portfolios is obvious, and the same is true of crypto. BlackRock will equip advisors to teach millions of customers how to allocate X% of their cryptocurrency portfolio and completely alter the narrative in accordance with macro." This tweet from the Real Vision CEO suggests that guru Raoul Powell may be Gary Gensler's cold comfort gift for the cryptocurrency industry. It seems pretty clear to me that Gensler is giving BlackRock the Bitcoin ETF nod and that he has that Prometheum circus going to prove that he isn't stopping crypto entirely. It's all politics, And in the end, he throws a bone to Wall Street so he can suggest they are more trustworthy. As we provide you with additional snippets from Yusko's talk, please share your opinions about BlackRock's ETF application.
And JP Morgan, I shouldn't accuse people directly, but it's hypothetically possible that since November of last year, when the futures-based ETF was issued, it's entirely possible that those large institutions have been shorting the shit out of Bitcoin. I 100% agree. Look, the fear, I'll call it an irrational fear, of the boogeyman, inflation, I think is why they're keeping the gun holstered. Right? It's not out facing us anymore, but it's holstered. It's not put away, locked in the box or the cabinet. But it's definitely ready, because there are people who, despite, again, the data, believe that there's still going to be this wage pressure and this housing price recovery, and all these things are just going to magically jump off the bottom. I don't see it. And again, for me, right, the only thing that's holding up the economy from being in recession, like declared a recession, is that we fudged the numbers on labor. If we didn't fudge the numbers on labor using the birth death ratio and all these other metrics, we would have been in recession a long time ago. Not a depression like recession, not a 1929-30, not a 1983, but a 2001 mild, shallow recession, a reset. And that actually is not a bad thing. I mean, there's still a whole bunch of companies that need to go away. There are a whole bunch of loans that need to be called. I mean, the real estate market, the real estate debt market, you can't even actually appreciate how bad it is. I mean, I've just in the city, in New York, for one of the first times in a long time. And I'm sorry, the buildings are empty. They're empty. Now, people are trying to get people to come back to work, but I was meeting with this guy, and he says he's tried to mandate that his guys come back. And I'm like, no, we're just not. And I got a see-through building that I go to work in every day, and them, and we will take care of them, and we will suspend the limits just like they did in the first crisis. And look, a Ponzi works really well as long as the confidence stays strong, which is kind of why, if you think about the chairman's job, it has become one of jawboning, being a good talker, right? You have to be a good talker, and so you have to kind of obfuscate and bob and weave and float like a butterfly. And you can't really say much. Like I used to love listening. I stopped listening to them because they just bothered me. But I used to like listen to them and try to put together just how many words are actually said and how many actually have meaning. And we've all had that conversation with people, right? Where they say all this stuff. You actually didn't say anything. Yeah. You didn't commit to anything. You didn't give me any real insight. You just used a bunch of jargon and a bunch of lingo, and you said, well, on the one hand or the other hand or the other hand. I'm like, well, you only have two hands. But look, it's a great point. And, history, they say it doesn't repeat, but it rhymes.
Yep.
No, it kind of repeats sometimes, and particularly about economic cycles. And that has been the case up until the period post 1930, where it was suspended because of QE, when QE was actually invented. And QE was not invented in 2009. QE was invented in 1930. And the reason was we were an emerging market. That's hard for most of us to believe, right? But America was an emerging market. We were not the kings of the world. The UK was the British Empire. Europe was where it was at. And we were an emerging market, struggling with our identity, who was going to be in charge, the Irish or the Italians. The gangs were warring. And it was dicey. And no one wanted to buy our debt, right? And so we have this big problem, this collapse, this banking crisis, and money gets eviscerated and evaporated, and we had to issue a bunch of debt. Well, no one was going to buy it. I said, "Oh, let's buy it ourselves." And it's such a funny thing to think about taking a liability out of one hand and transferring over to another hand, but they're both connected to your body. The central bank and the treasury. Oh, the central bank is independent. Is it really? Not really, really. I mean, it is in the sense that it's owned by a different group, right? It's owned by a cabal of bankers and families, but they put the people in the government. So it's kind of this interesting dynamic.
Household financing, which is
big,
ridiculous.
and it's an amazing point. And I love these kind of foundational teachers. I mean, I'm a huge teacher fan.
Mm-hmm.
Teachers are way underappreciated and undercompensated and all the things, but a teacher like that can make a difference. I mean,
In the meantime, Bitcoin responded to positive news, hitting a new weekly high on Saturday. However, on Thursday, the leading crypto asset fell below $25,000 due to regulators' harsh crackdown on the sector and Fed Chair Jerome Powell's declaration that additional rate hikes would follow this hawkish pause. In addition to losing almost 4% of its value from the day before, Bitcoin fell to $1,620, over 6% below Wednesday's values, the lowest price of any coin since March 13th, due to BlackRock's revelation. Bitcoin increased in value on Friday and Saturday, reaching its highest price since May 8th at a weekly high of $26,769. Additionally, Ether increased, reaching an intraday high of $1,766 to start the weekend. What do you think of Yusko's analysis of the U.S. economy and his thoughts on BlackRock's ETF application? Please share your thoughts in the space provided below. If you enjoyed this video, please subscribe to the channel and enable post notifications for more videos like this one. Thank you for watching.